All right, guys, for example, this is our example. They said here on May the 10th, 20.2, H. Shady's balance in the debtors ledger of Bev's stores was 320, meaning that H. Shady owes us 320 rand. This account is long overdue. This means that the debtor has owed us more than we allowed the debtor to owe us. So basically, guys, we actually allow a debtor a certain period of time. Most businesses allow their debtors to repay them back within 3 months, others 6 months, others say 5 years, so on and so forth. Okay. In this case, guys, this debtor didn't pay us for for a period that we stated. Okay, hence we say it's long overdue. Now, since it is long overdue, guys, it means that this amount must be written off. What does write off mean? It means that it'll result in bad debts. And what did I say bad debts is? It is an expense. Expenses increase on which side? On the debit side. And remember, guys, according to the accounting principle, double entry principle, for each debit entry there should be a credit entry. In this case, guys, the credit entry will be the reduction of the debt, because we are writing off, meaning that this debtor will never pay us that 320, and that 320 is included as part of his balance. So his balance will decrease, meaning that from 320 minus 320, this debtor will owe us nothing. Okay, because we have written it off. In our general journal, guys, we're gonna start with the source document. In this case, the general voucher 1. The day will be the 10th of May. I'm gonna debit bad debts because this is an expense. Next to this, please write an expense. It'll be, obviously, that is the general ledger account. It'll be debited by 320. All right. At the same time, the account that will be affected will be H Shady, but because H Shady, I mean, if since H Shady is a debtor, it will also affect debtors control. H Shady's amount that H Shady owes us will decrease by 320. When we reduce H Shady's account by 320, it simply means that he actually owes us nothing. Okay, hence it will be recorded in the debtors ledger, and it will also decrease our debtors control account. I wrote the account written off as bad debts. It will also decrease our debtors control account by 320 rands, guys. This entry is actually very important. If the entry affects a debtor or a creditor, it also will be recorded under debtors control and creditors control. In this case, this is a debtor. It will be recorded under debtors control. I'm basically showing you that this account actually decreases your debtors control, because your debtors control increase on the debit side. In this case, it will decrease your debtors control on the credit side. Okay. Please note that under bad debts was not recorded under debtors control and was not recorded under creditors control, because that doesn't affect those. Okay, it is simply an expense. Okay, the entry that will affect debtors control, this entry affects debtors control because this person, this account is a debtor. It's a debtors control account. That is why it will be recorded under debtors control. That is an expense account. It can't be recorded under debtors control. Okay, expenses will increase on the debit side, as I've indicated here, because bad debts is an expense. It'll increase on the debit side. H shady is a debtor, it's an asset, and assets will decrease on the credit side. I hope it makes sense. And since it affects your debtors control, which is an asset, it will also go under debtors control, and it will be recorded on the credit side. I hope that makes sense, guys. Please play the slide as many times as possible. For today, guys, obviously you know that you're gonna have a classwork. Here, guys, I've just explained what I've explained audio with audio. In this case, guys, I'm gonna, well, I will explain this again later. Just now, actually, not later.